Good morning and welcome to another episode of Underexposed, the daily crypto news podcast where we dive into the world of cryptocurrency market trends and strategies. I'm joined today by my co-host, and together we'll explore the latest developments in the crypto space.
That's right, we've got a packed show for you today, with a focus on the recent price movements in the cryptocurrency market. Let's start by taking a look at the current prices. Bitcoin is sitting at $93,033, down 1.12% from yesterday. Ethereum is at $3,168, down 2.17%, and XRP is at $2.43, down $52.43, down 3.56%.
Those are some significant drops, especially for XRP. It's interesting to note that the entire market seems to be in a bit of a downturn. Even the stable coins like USDC are experiencing some volatility, although it's minimal, at a 0.0% change.
Yeah, and it's not just the big players that are feeling the heat. Some of the smaller altcoins like ADA and SWI are down 7.28% and 7.26% respectively. These kinds of price swings can be tough for investors to navigate.
Absolutely. And it's not just the short-term price movements that are causing concern. The overall trend in the market seems to be bearish, with many coins experiencing significant drops over the past week. We'll be exploring some of the possible reasons behind this trend later in the show.
That's right. We'll also be discussing some strategies for investors to mitigate their losses and potentially capitalize on the current market conditions. But first, let's take a closer look at some of the other coins that are making headlines. BNB is down 2.12%, Sol is down 2.81%, and DOGE is down 3.39%.
And it's not all bad news. Some coins like Leo are holding steady with a relatively small drop of 0.55%. We'll be analyzing what's behind this resilience and whether it's a sign of things to come for the rest of the market.
We'll also be exploring the impact of the current market conditions on the wider crypto ecosystem. From investors to developers, everyone is feeling the effects of this downturn. We'll be discussing some of the potential long-term implications and what they might mean for the future of cryptocurrency.
It's going to be a fascinating conversation. We're excited to dive in. So let's get started and explore the world of cryptocurrency market trends and strategies.
Sounds good to me. Let's take a closer look at the current state of the market and see if we can identify some patterns and trends that might give us a clue about what's to come.
Building on what we discussed in our previous segment about the blurred lines between politics and the crypto world, we have some breaking news that's further highlighting this connection. Trump's Treasury nominee, Scott Bessent, is reportedly planning to divest his Bitcoin ETF holdings to eliminate a potential conflict of interest.
This move shouldn't come as a surprise, given the emphasis on ethics and transparency in government positions. According to the New York Times, Bessent holds investments worth over $700 million, and it's crucial for him to avoid any potential conflicts of interest. Okay.
What's interesting here is the fact that Bessent's decision to divest his Bitcoin ETF holdings is a clear acknowledgement of the growing importance of cryptocurrencies in the global economy. It's no longer just a niche interest, but a significant player that's attracting attention from the highest levels of government.
Speaking of the current state of the crypto market, let's take a look at the latest prices. We're seeing a slight downturn across the board, with Bitcoin down 1.12% at $93,033. Ethereum is down 2.17% at $3,168.53, and XRP is down 3.56% at $2.43. So
it's worth noting that the market is still reeling from the recent volatility, and we're seeing a lot of uncertainty among investors. However, as we've discussed before, this could also be a buying opportunity for those who are willing to take on the risk.
Looking at some of the other major coins, we see that BNB is down 2.12% at $677.22, and Sol is down 2.81% at $180.76. DOGE is also taking a hit, down 3.39% at $325,114.
One thing that's standing out to me is the performance of some of the smaller coins. We see that ADA is down 7.28% at $924,541, and SUI is down 7.26% at $4.46. These coins are often more susceptible to market fluctuations, but they can also offer significant growth potential for investors who are really to take on the risk.
As we continue to monitor the market and its response to global events, it's essential to keep in mind the interconnectedness of the crypto world and traditional politics. We'll be keeping a close eye on developments like Scott Bessent's divestment of his Bitcoin ETF holdings and how they may impact the market in the long term.
And as always, we want to hear from you. What do you think about the current state of the crypto market, and how do you think it will respond to the growing involvement of governments and traditional institutions? Let us know in the comments, and we'll discuss some of the most interesting responses in our next segment.
Building on what we discussed earlier about market trends and volatility, I'd like to dive into a story that could shake things up in the altcoin space. According to recent reports, the altcoin market could be in for a wild ride this week, with a massive $3 billion token unlock schedule on the horizon.
That's right, and it looks like Ondo is leading the charge. On January 18, Ondo Finance is set to unlock a staggering 1.94 billion Ondo tokens, which is equivalent to over 130% of the token's current circulating supply.
To put that into perspective, this is the largest token unlock schedule we've seen since November. And as we know, when a large number of tokens flood the market, it can lead to increased volatility. Investors will be keeping a close eye on Ondo and other altcoins this week to see how the market reacts.
Absolutely. And speaking of investors, let's talk about Scott Bessent, the nominee for Treasury Secretary. With just a week to go before President-elect Donald Trump's inauguration, Bessent is making some interesting moves. He's preparing to divest various assets, including his stake in BlackRock's Bitcoin ETF.
That's a significant development, especially considering the federal ethics guidelines that require nominees to sell specific holdings within 90 days of Senate confirmation to prevent conflicts of interest. It's interesting to see Bessent taking proactive steps to comply with these guidelines.
And it's worth noting that this divestment could have implications for the broader cryptocurrency market. As a high-profile investor and soon-to-be Treasury Secretary, Bessent's moves are closely watched by the market. We'll be keeping an eye on how this develops and what it might mean for the future of cryptocurrency regulation.
Of course, this also raises questions about the role of government officials in the cryptocurrency space. As we've discussed before, there's a delicate balance between promoting innovation and ensuring regulatory compliance. It'll be interesting to see how Bessent navigates this landscape in his new role.
Definitely, and we'll be following this story closely as it unfolds. In the meantime, we want to hear from you. What do you think about the altcoin market's prospects this week? And how do you think Bessent's divestment will impact the broader cryptocurrency space? Share your thoughts with us on social media, and we'll discuss them in our next.
As we continue to monitor the current market trends, let's take a look at the numbers. Bitcoin is sitting at $93,033, down 1.12% from yesterday. Ethereum is down 2.17% at $3,168.53. These slight dips don't seem too concerning, especially considering the overall growth we've seen recently. What do you think is driving this minor correction?
That's right. And we also see some of the other major coins experiencing similar drops. XRP down 3.56%, BNB down 2.12%, and Sol down 2.81%. It seems to be a market-wide phenomenon. I think it's essential to remember our previous discussion about market volatility. As we mentioned earlier, investors need to be prepared for fluctuations in the short term.
Absolutely. And while we're on the topic of investments, I'd like to touch on a recent report from Laser Digital. They're predicting that 2025 could be a significant year for cryptocurrency exchange-traded funds, ETFs. According to their analysis, more than 12 new digital asset ETFs could be launched in the U.S. this year, pending SEC approval.
That's exciting news. The approval of these ETFs could be a significant step in mainstreaming cryptocurrencies. If you recall, we discussed the growing institutional interest in crypto last week. The launch of these ETFs could provide a more accessible entry point for institutional investors, potentially leading to increased adoption.
The report also mentions that a combined Bitcoin and Ethereum ETF is likely to be the first to get approved. This could be a game changer, as it would allow investors to gain exposure to both of these prominent cryptocurrencies through a single investment vehicle.
Speaking of mainstreaming, it's worth noting that the growth of ETFs is closely tied to the overall narrative of crypto adoption. As more traditional investors begin to see the potential of cryptocurrency, we can expect to see increased demand for these types of investment products.
Building on what we discussed earlier about market volatility, the approval of these ETFs could also contribute to a more stable market environment. With more institutional investors participating in the market, we might see reduced price swings and increased liquidity.
That's a great point. The introduction of these ETFs could be a significant step in maturing the cryptocurrency market. As we move forward, it will be essential to keep a close eye on the developments surrounding these ETFs and their potential impact on the broader market.
We'll continue to monitor the situation and provide updates as more information becomes available. In the meantime, let's keep a close eye on the market trends and see how they respond to these potential developments.
And as always, we encourage our listeners to do their own research and stay informed about the rapidly evolving world of cryptocurrency.
We're wrapping up today's show, and one of the major stories we didn't get to touch on yet is the news coming out of Singapore. It seems their gambling regulatory authority has forced local ISPs to block access to Polymarket.
That's right, and they're not alone. Taiwan and France have also targeted the prediction market platform, citing their local gambling laws as the reason. We've seen a growing trend of governments cracking down on platforms that operate in the gray area between prediction markets and traditional betting.
This is an interesting development, especially considering our earlier discussion on the global regulatory environment. It seems like we're seeing a domino effect where one country takes action and others follow suit. What are your thoughts on this, and how might it impact Polymarket's operations?
Well, it's certainly going to limit their reach and accessibility, but it also raises questions about the role of governments in regulating these types of platforms. We've seen the rise of decentralized finance and the emergence of new business models that don't fit neatly into traditional categories. Governments are struggling to keep up, and this is just one example of that.
I think you hit the nail on the head there. This is a classic case of innovation outpacing regulation. Polymarket's model, which combines elements of prediction markets and traditional betting, is clearly causing headaches for regulators. But it's also worth noting that this isn't a new phenomenon. We've seen similar issues with other platforms in the past.
Exactly. And it's not just about Polymarket. This has broader implications for the entire crypto and DeFi space. As governments continue to grapple with these new technologies and business models, we can expect to see more regulatory actions like this.
So, what are the key takeaways from today's stories? We saw a significant development in the Ethereum ecosystem with the successful deployment of the latest hard fork. We also discussed the ongoing regulatory challenges facing the industry, including the news about Polymarket.
And let's not forget the market analysis we did earlier. We're seeing a bit of a mixed bag, with some assets performing well while others are struggling. As we head into the rest of the week, it's going to be important to keep an eye on the macroeconomic trends and how they might impact the crypto market.
Absolutely. As we wrap up today's show, what's your overall market outlook? Are you bullish or bearish on the short-term prospects for crypto?
I'd say I'm cautiously optimistic. We're seeing some positive developments in the space, but we also need to be aware of the potential headwinds, regulatory uncertainty, macroeconomic trends. There are a lot of factors at play.
Well, that's all for today's show. Thanks for tuning in, and we'll catch you all on the next one.